Hey, if you're looking to create a set of financial projections for a staffing agency or a recruiting agency, then you've come to the right place. We have put together a financial projection template built specifically for staffing companies and recruiting agencies. And so I'm going to walk you through how to fill this template out, how it works, and how to get it ready for potential lenders and investors if you're looking to raise capital. Before I dive too far into that, just a little bit of background. My name is Adam Huxema. I'm the co-founder of ProjectionHub. And over the last decade, we've helped over 50,000 entrepreneurs create financial projections for potential investors and lenders. And today we're specifically focused on this staffing agency template that we've put together. I'm going to put a link in the description of the video below to the template so you can grab that and follow along. Also, if you stick around to the end of the video as a thank you for sticking around with us, we are going to give you access to a coupon code that you'll be able to get as a discount on the template as well. So with that, let's go ahead and dive in, and I'll walk you through how this works. Okay, so this is our at a glance tab. So this is the kind of at the end of the projection process. This is what you're going to get: some high level charts and financial statement overview, some graphs, break-even analysis, and some key ratios here. You're also going to get a 5-year income statement summary, a 5-year cash flow summary, a 5-year balance sheet summary, and then an income statement, cash flow statement, and balance sheet statement, all broken down by month for each of the 5 years. So you get that monthly level detail if you need that, as well as the annual summary data. Now, in order to produce all these reports, we have a little bit of work to do. So I'm going to go back here to our input assumptions tab and kind of walk you through the different input tabs here. So we can start out by just noting that any cell that's highlighted in light blue is an assumption cell that you can change without breaking something in the model. So you can put in your company name, your projection start month. You can add an inflation rate for operating expenses throughout the model. You can add in a personal investment. So this would be investment that you're putting in to the business. We have set this at month 0. So basically that means at the beginning of the model, we're starting the company, we're starting the projections here with a $20,000 investment here. Accounts receivable. So this is actually really important for staffing agency models a lot of times. So you are likely to feel a cash flow crunch. And so a lot of times you may have to, if you're placing employees, so if you employ them and then you place them working for a different company, right? And so if that's the model, you'll often have to pay your employees before you get paid by your customer, right? And so a lot of times there is maybe a net 30 payment structure, meaning 30 days, within 30 days of providing the service, or it may end up being even a bit longer because you may not invoice till the end of the month. So let's say your employees are working for a customer for the entire month. At the end of the month, you invoice, or the beginning of the month, you invoice for the prior month, right? And in the meantime, you've been paying your employees. Now you may have to wait 30 days or maybe even longer to get paid by your customer. So that's that accounts receivable terms. And so what we're saying here by putting 0% as paid at time of receipt of the service versus 100% paid on net 30, basically this just means that, yeah, you're gonna have to wait. And that makes a big impact on your cash flow, which again might be why you're trying to get a loan. So that is what this section means. Now on the inventory section, you probably aren't gonna have any inventory, so that's why we have set these both to 0. Fixed assets, probably not going to have a whole lot in the way of equipment or fixed assets. Maybe you have some, maybe you have an office, you did some office renovations for $15,000. So that's what we have set it in there now. Maybe you have a couple computers at $5,000. Now we have the ability to add in loans. So we've got a loan here for $75,000 at a 60-month term at 9%. And the payments will start on month 1. So you can add in multiple loans there. Now, let's go to our input revenue tab. So the way that we have structured this is that there are kind of 2 different types of revenue that you can generate. So this will work for situations where you are recruiting employees and then you employ them yourself and you place them in other companies to work. So this could be like nurse staffing agency where you're placing nurses at different hospitals or for short stints, right? But you are the employer. So this would be, this situation is we would consider like contract revenue. So you're employing the nurses or whatever the employees are and placing them on different contracts. And so we have the ability to put in the employee type. So we're going to stick with this kind of medical example. So we've got a travel nurse at a billable rate. So this is what you can bill your customer, billable rate of $103 an hour. And then the cost per hour, this is what you're actually paying the nurse, $65 an hour. And now we say, okay, what number of billable hours per month for this employee type do we think we'll be able to bill? So we think we can bill 100 hours on this contract in the month. And so that will generate $10,300 worth of revenue and $6,500 worth of labor cost. And so we have the ability to add in 3 different employee types. So let's see, we've got CT scan technicians here as well, and then maybe just a catch-all of other employees. So you can put in those different categories of employees and the rates and whatnot. So that's contract revenue, again, where you are the employer and you're placing the employees on contract. Now there's another type of revenue that you may also do or may only focus on, and that could be kind of recruiting employees and then generating placement fees. And so this example, let's say you are recruiting software developers for Salesforce, and you find a employee, you place them, Salesforce ends up hiring them. In this case, it's not a contract. You're not going to employ that developer. Salesforce will actually employ them. So you're going to get a one-time recruitment fee or one-time placement fee, and that's usually based on their annual salary and then some percentage placement fee that you're going to get. So we're saying, okay, let's assume that the average base annual salary is $100,000, and we're expecting a 37% placement fee. 37% of the base salary is a placement fee. And then we can put in each month the number of placements we think we're going to be able to place. So we're estimating 1 per month. So that gives us our recruitment placement revenue. And then maybe you have some cost of goods sold associated with that revenue. It may be that you really don't have much in the way of cost of goods sold. It's different, right, than the contract revenue above. You're actually paying the employees, right? So you have their hourly cost. In this situation, you probably don't have much, but you have the ability to put in, if for some reason you do have a cost of goods sold here, you could put in a percentage, but you may just want to set this to 0, depending on your model. Okay, so that will then allow you to calculate here our projected contract revenue and recruitment placement revenue, as well as our cost of labor down here. Okay, so then we move on to our operating expense tab. Here you can enter in things like advertising cost, accounting, background checks, insurance, rent, utility, software, sales commissions. So maybe you are you have recruiters that you're employing, and they're out there recruiting, and when they place an employee, they get a 10% commission, for example. And so the way that you can enter in different expenses here, there's a drop down, and you can select whether it's a fixed dollar amount or a percentage of total revenue, or percentage of contract revenue, or percentage of recruitment placement revenue. So for example, let's say you only give sales commissions on recruitment placement revenue. So you have a recruiter, they're out there every time they recruit someone and place them, they get a 10% commission. Okay, then you'd want to select recruitment placement revenue, and then you can put in 0.10 to represent 10%. And so that would be your 10% commission here. Now we can also add in salaried positions here on the Salaries and Owner Draw tab. And so you can say, okay, well, we've got recruiter 1 and 2, and they're both going to get a base salary plus that 10% commission that they're eligible for. And then maybe we also have a salesperson that is trying to go win contracts. So that's another employee type that we might have. You could also put in additional, operational level salaries here as well. Okay, and that really brings us back to our at a glance tab. So that is kind of the end of the process. You've created your projections. Now, if you have any questions or you have a unique scenario that you need some help filling the template out or customizing it in some way, please don't hesitate to reach out to us at support@ProjectionHub.com. We'd be happy to help with that. Also, as I had promised, as a thank you for watching to the end of the video, you can go down the description of the video below. There'll be a link to a form. You fill out that form, we will email you our most up-to-date coupon code, so you'll be able to get a discount at checkout on this particular template as our thank you to you. And again, any questions at all, please leave a comment in the comment section of the video below or reach out to us directly at support@ProjectionHub.com. Thanks.